Benchmarks remain range-bound even as the IT sector sees severe dropping. The Nifty stays near the 25,800 mark with broader indices moving in tandem. LD gains in autos, metals and oil and gas stocks keep the market afloat.
IT stocks are under sharp pressure, tracking heavy losses in US tech ADRs after Anthropic launched a new AI plugin that could automate outsourced legal work. The development has sparked fears of demand disruption.
NBFC major Bajaj Finance posted strong operating performance in Q3. However, high provisions and labor code costs drag profits. Management remains confident on the asset quality, while Morgan Stanley remains an overweight rating.
Hindustan Aeronautics is under pressure after reports suggest it was knocked out of India's fifth-generation stealth fighter program. This marks the first time HAL will not be part of a marquee defense aircraft project.
And shares of Sheela Foam surged 13% after strong Q3 results, with profit jumping over 3 times and margins expanding on solid volume growth. Aarti Drugs slipped 6% as margin contracted despite the revenue growth, while Kalyani Steels climbed 8% on the robust quarterly performance.
The biggest interview of the week is the finance minister's first interview since the announcement of the historic trade deal. She says Indians' interest is paramount for the government, adds that the fine print will be released soon, also addresses the concern over hike in STT and F&O trading.
Hello and welcome. You tune in to Buy Now Sell Now. I'm Ankita Saxena and with me is Kavita Thapleal. In the next 1 hour, we will take you through all the stocks queries that you've been sending to us, and we'll get them answered by our experts on the technicals and on the fundamentals. But let's take stock of how the market is shaping up. Now, remember, we saw that strong rally yesterday, which of course turned a very, very range-bound, or by the time we closed the markets yesterday, very range-bound session is what we saw after the rally that we saw coming in. Now, we did build up on those gains, but as of now, we have turned absolutely flat. We are pretty much within previous sessions range. We are perched at 25,744 on the Nifty. On the Bank Nifty as well, we are pretty much within the previous session's range, but Bank Nifty is doing better than Nifty. We are trading up almost 200 odd points on a Nifty Bank. So that's where the action is coming in. But let's talk about the broader market as well. We do have mid-cap that is flip-flopping between the red and the green, and as of now, if you pull up the charts for mid-cap, that has turned green. Very, very flat moves coming on the mid-cap index, 0.01% gains coming in. Small caps, though, is an outperformer that is trading with gains of almost 0.9%. The Nifty Bank and the small cap space is the one that is really holding the fort in the market. Sectorally speaking, we do have Nifty Energy that is in focus today, that is trading up 1.7%. R Power, Oil and ONGC, all of them, in fact, ONGC is a top Nifty gainer as well. Now, remember, oil prices had shot up 3%, on the back of that renewed tension between US and Iran. And on the back of that, all the oil marketing companies are likely to do well. So ONGC is the top Nifty gainer today, trading with gains of 4.5%. And we also have metals that are doing well with gains of 1.2%. NMDC, General Steel, SAIL, Hindustan Copper, they're all trading with gains of 1.5%. But on the back foot is Nifty IT, that is seeing a drubbing. That is down and out 6.2%. In fact, globally also, all the IT counters have been reeling under pressure. And on the back of that, Indian IT companies are also reeling under pressure with cuts of more than 6.5 odd percent. Besides that, we have a couple of names that are buzzing in trade. We have Siemens Energy, that's up 5%. We also have Varroc Engineering, that's gained more than 5% after securing a big order. and a couple of other pockets that are moving on the back of news flow. But net, it's a decent day coming in because the advance decline ratio is clearly tilted in the favor of advances. But to begin the show, we are now joined by Himen Kapadia, the technical associate to DR Choksi FinServ, who's now joining us, and Lancelot Dikuna, who's our fundamental guest, Chief Investment Officer, ValueX Wealth Connect, who is now joining us. Good morning, and thank you so much for joining us, gentlemen. So, Kavita, let's begin with the first caller that's coming in today.
Absolutely, absolutely. Hi, good morning, both of you. And yes, we have our live viewer also. Hi, good morning. How are you doing? You're calling from?
I am calling
Is
from
this Ram?
Chennai.
Chennai. Hi, Ram. How are you doing?
I'm fine. Thank you very much, and thanks for your wonderful team, and thanks for it now.
Thank you so much for watching us regularly, and thank you so much for sending us your question also. Both experts can hear you. You can ask your question.
The question is, I have purchased HUDCO at 250 rupees per share.
Okay.
I want to know whether I should book losses or average.
Okay. I'll just confirm your buy price. The average price is 252. Is that right?
Correct.
Okay. For how long you want to be in this buy now?
Maybe a year, maybe 2 years.
Maybe a year or two. Okay. Let us just get a fundamental and technical both check. So, Lancelot, I'll start with you. Time frame is almost 1 to 2 years, but the average price is 252. What is it that you might want to recommend?
From about 17.5 trillion in
Of course, earnings haven't really grown from the quarterly numbers that we see. It's likely to be flat at the end of the year, and that would create, a situation where it's trading at about 14 times PE. Now, unless there is earnings growth, really you can't see higher prices. Even at the current price, it's trading at about 14 times earnings and about 2 times price to book. So I think it's fairly priced at this point of time. I don't see, if unless there's a change in earnings, there's not going to be any significant change in the market valuation. So from that perspective, if you're not a long-term, investor, then you can look at cashing out. But if you are a long-term investor, then probably even an option of averaging when the stock price goes down would be a good option, because fundamentally the business will grow since they are in the urban development infrastructure business and lending to that sector. The business will grow over a period of time.
All right, that's a fundamental take coming in from Lancelot. But then, Himen, what will be your take? I mean, just in case a short-term or a medium-term outlook you might want to recommend.
A very good morning to Kavita. A very good morning to Ankita. Thank you for having me on the show. I think nothing much looks like happening as far as HUDCO is concerned, Kavita. We've been corrective for some time, peaked at in July 24, and since then we've posted lower tops, lower bottoms. I don't see too much of a downside. 160 is rock solid support. Think that will change. We need to close about 250. So I'd say hold on if he has like he specified 2 years. He got outlook for 2 years or more hold. Otherwise, it's a sell on both.
All right, so that's the word coming in as far as HUDCO is concerned. But let's move on to a question that's coming in on WhatsApp. This is the WhatsApp query that's coming in from K Guru, who's writing in from Chennai. He says, kindly suggest 2 mid-cap or small-cap stocks which can be bought over a period of 2 years. Lancelot, this is a tough one because firstly, would you recommend a buy from this mid space, because small and mid caps have seen a lot of drubbing, and in that sense, would you recommend buying stocks from SMIDs, and within that, what would be your picks?
So I think, the space has corrected quite a bit, but because of the correction, we have seen that valuations have also become reasonable at least in the case of certain stocks. So if one has to pick up stocks where you have a significant, growth potential as far as the earnings is concerned, then definitely one can look at, buying into those companies, because even though they are mid caps or small caps, they would generate fairly good returns going forward. But your investment horizon has to be at least 3 to 5 years, because in the mid and small cap space, it takes time for these companies to generate, outperformance in terms of earnings, and then only the markets will start to reflect the growth in earnings. So if I had to suggest, 2 companies, I think One company could be Go Digit General Insurance. It is in the general insurance space, has been performing pretty well, and given that the general insurance space is a growth avenue, they've been able to extract a bit of market share from the others. You will see as more and more people move to digitization or using digital insurance, this business will grow, and this company should perform better across the period of time.
All right, so that's your pick, Go Digit. But also, let me get a tech check as far as small and mid-cap space is concerned. Hemant, what would be your picks from the technical chart point of view? Now, I do believe that, of course, we do need a greater time horizon as far as SMIDs are concerned for them to generate returns. But what in your sense should be the picks for from the technical standpoint?
Okay, I think one of the PSU banks can be considered, because the PSU bank index has done well, Nifty PSU bank index. Okay, State Bank has led everything, but there are a lot of stocks. PNB is still left to catch up there. Okay, PNB is not exactly a mid cap, but something even like a Bank of India, Union Bank. I think some of those can be looked at, and well, it's once again not a mid cap, but even something like a REC or a PFC would make sense on technical parameters.
All right, so these are the spaces where one can initiate buying. But then let's move on. And a very interesting question. Hemant, I'll come to you because the person is really suffering losses. This is Mr. Satyan. And so he wants to know about office, buy price is 600, and also DLF. He is really concerned whether he should be holding it on or switching. He's not given us the buy price for DLF, but then it seems he's in losses. So what could be a short-term strategy in both of these counters?
Okay, actually, frankly speaking, Kavita, office doesn't have too much of data the way I see it. It's a relatively new listing. So having said that, one would probably need to keep a stop loss of 370. I believe a short-term bottom is being formed if it hasn't been formed. We're just 1 day away from the low. Short-term bottom has been formed, keep a stop loss of 370. I think a close above 420 should give it some upside to probably 460, 470. So that's where one can, look to, sort of exit to something. But once again, not too much of data to take a longer term call. DLF, I would say hold. If you have a slightly longer term view, I know real estate has fallen off a cliff, but at the risk of sounding overly optimistic, it seems to be in a correction within a bull market. I would say hold. 2 years holding is necessary, and I don't think there's much to lose from this point of view. Support level, which is quite crucial, is around 590, 600.
All right, it's a longer duration hold. In fact, Lancelot, would you want to give your view on office, considering a medium-term outlook?
So I think one can look at holding onto the stock from a medium-term perspective, because the business is going to grow. It is in a high growth area, and maybe because of the valuations seem a little expensive at this point in time, one may have to wait for period of a year or two before you can actually get the results. So that would be an option to look at.
All right. Well, with that, it's time for us to slip into a short break. Don't go anywhere, because after we come back, we'll take more questions on the other side. Stay tuned.
Welcome back. You're watching Buy Now, Sell Now, where we are answering your stock-specific queries. Hemant Kapadia and Lancelot Tikuna are our guests today, who are answering your queries live. Just in case you want to send across your questions, you can do that on our WhatsApp number. Let's just flash the number quickly on the screen so that you can note it down. Write down the name of the stock, the price at which you bought it, and as per your time horizon, we can give you a technical or a fundamental recommendation through our guests. So the WhatsApp number that's flashing on the top of the screen can be noted down, and yes, we are taking your stock specific queries live. But then let's move on, and this is strictly a fundamental query, and this is from Raman, Chennai. And Himen, no, Lancelot, I'll come to you. So he wants to know about EID Perry, a good buy at current prices, and if not, what else can be bought?
See,
Even Volta. Sorry, there are two
yeah,
queries,
sure.
EID Perry and Voltas.
Volta. So as far as EID Parry is concerned, this is majorly into the sugar and nutraceuticals business. Also has an ethanol production business and some amount of biopesticides through various group companies. It's part of the Murugappa group. However, being in the sugar business, sugar is a very seasonal business and it depends on the sugarcane crop or the pricing of sugar, as well as, there was always a great demand that ethanol will get blended further into petrol products, and that would be a boost. But we've seen over the past couple of years, these cycles have been very steep, and at the moment, the earnings haven't really been that good in terms of growth. Its EPS last year was about 49 rupees. So considering that it is trading at the higher end of the curve and we are at the higher end of the cycle, there's a larger possibility that the cycle could correct. So at this point in time, I would, stay away from EID Parry because of the nature of the business, not because the company is not that great. And the other company you had said was Voltas, right? So I think,
Yeah.
Voltas is basically a company which was engaged in the air conditioning air conditioning business, and it has heavy package air conditioning as well as retail home air conditioning business. However, this business is seeing a lot of competition, and as we have seen, companies like LG and others, in order to get market share, have been actually trying to cut prices. And with the increase in all the elements of air conditioning like copper, all the raw materials going up, I think it's going to face a lot of challenges in terms of being able to maintain the same margins they had in the past. And its stock trades at almost 90 PE. So I think for a company which is going to see challenges in its business trading at 90 PE, the risk reward ratio is not favorable for you as an investor to buy it at this point in time. So it would be an avoid.
An avoid call coming in as far as AID Perry is concerned on valuation concerns. But let's move on to an ET Now exclusive before we answer all your stock specific questions. The financial bids for IDBI Bank are due later this week, with the Kotak Mahindra Bank and Fairfax India Holdings leading the race. Now, Ankur Mishra is joining us with the details of the story. Over to you, Ankur.
Yes, the race for IDBI Bank is heating up, and we have been informed through sources that three bidders are considering to bid for the bank. We understand that Kotak Mahindra Bank as well as Fairfax are leading the race. They are likely to submit the bid, but even Oaktree Capital is considering to submit the bid, and final decision can be taken soon. However, the fourth bidder which was there in the race, Emirates NBD, is unlikely to submit the bid because they have already had a deal with another bank. Now, as far as this process is concerned, we have been told that this week is the deadline for submitting financial bids, and that will be done by the bidders, and later on in the next week the bids are likely to be opened. Remember, when we asked this question about IDBI Bank to even Deepan's secretary, we were told that the process is on, and the expectations are that by end of this fiscal year the process should be completed, and we may soon see a new bidder, a new owner of IDBI Bank.
So much for all those updates, Ankur. But then let's move on, and we have a live caller joining in from Delhi, and his name is Neeraj. Neeraj, hi, morning. How are you doing today?
I'm fine. Thank you so much for taking up this query. My query is about Bank of Maharashtra, where I have 350 shares at a price of average price of 58 rupees. Just want to know, will it breakout candidate for Bank of Maharashtra? That is one. Second is about Navali Lignite Corporation NLC. Is it good to enter into this stock at current price?
All right. Any specific reason why NLC is your choice to enter?
Because of rare earth minerals, I expect this company is into lignite mining, so might see a lot of investments and expansion of balance sheet.
Good. You sound someone who tracks the markets and as well as the news. And based on that, I believe you must be having a good stock portfolio as well. But then let's just get connected to Hemen first. And Hemen, what would be your recommendation?
Bank of Maharashtra, the whole, it's not a breakout candidate yet. The breakout comes in on a weekly close above 67. But the setup is positive, and if he has a 1 year time frame, I believe decent, if not significant, upside seem to be around the corner as far as Bank of Maharashtra is concerned. As far as NLC is concerned, it's been moving sideways for the past 2 years. Downside appears limited. First resistance 269, then 295. Looks good. Can buy. I believe once again the time frame should be at least 15 months to 18 months.
All right. All right, so that's the view coming in on Bank of Baroda. But let's move on and get one more question on board. This one's coming from okay. There's no name here, so we can't take this question. But let's move on to this question, which is coming in from Murli, who's writing in from Andhra Pradesh. He says 4,000 shares of he holds 4,000 shares of Sagility. Can he hold it for the next 1 year? He wants both a tech check and a fundamental view on Sagility. Lancelot, let me come to you first for the fundamental view on Sagility for the next 1 year. Is it a good hold?
So, Sagility is engaged in the healthcare focused technology space and primarily caters to the US markets. So that, with the changes in terms of AI coming in and the disruption that can be expected on the AI side, it is, there is a element of risk because the business that it is in could be taken over by the artificial intelligence, machine learning, programs, and there could be an element of redundancy in the business that they have. However, if you look at it from a client perspective, they have been, adding on clients to their existing services, and that business seems to be growing, on a quarterly basis or an annual basis. So if one has to look at the risk return, the stock trades about 25 times its earnings and is has a fairly good profit margin as well. But you have to factor this as a risk, that you can potentially, you could see the market cap wiped out if there's a major disruption in this space. So one can look at Sagility from a long-term perspective, but if you have to factor this in as as a potential risk as well.
Right. Only if your outlook is long term, you can really consider putting money in Sagility. But on that note, it's time for a short break. But before we slip into the break, let's talk about a very special initiative bringing the budget discussions on ground. ET Now is hosting the India's Investment Summit in Mumbai this Friday. Thought leaders, visionaries, policymakers, investors, MSMEs, and innovators will unravel the union budget of 2026, analyze its impact, and chart the country's economic direction for the year ahead. The summit puts the spotlight on India's BFSI sector at a pivotal moment between tariffs, currency valuations, union budget implications, and forthcoming financial year. Tune in to ET Now India Investment Summit.
Yes Bank has received approval from the RBI to appoint Vinay Muralidhar Tonse as its new MD and CEO for 3 years, subject to shareholder nod. Don't say formerly the State Bank of India is expected to take charge in March as Prashant Kumar continues on an extended term.
India's first pure-play AI company, Fractal Analytics, is set to hit the markets with an IPO worth more than 2,800 crores. Proceeds will fund overseas expansion, R&D infrastructure as investors bet on its improving profitability.
The $500 billion commitment to the U.S. will be over a period of 5 years, spanning data center equipment, civil nuclear and AI chips. Government sources say India's interests remain protected, though the Section 232 tariff relief is excluded. Negotiations are ongoing, with a joint statement expected soon.
The Reserve Bank of India begins its MPC meet today, with markets expecting a status quo at 5.25% after 125 basis points of cuts since 2025. The focus is now on policy transmission amid rupee pressure, tight liquidity and weak private investment.
Welcome back. You tune into Buy Now, Sell Now, where we get your questions answered. But before we get back to that, we are in the thick of earnings season, and we have an earnings candidate, MobiKwik, that has posted its Q3 numbers, and the company has reported its first profitable quarter. Now, they have incurred a profit of 4 crores versus a loss of 55 crores on a year-on-year basis and 28.6 crores in Q2. But we have now Bipin Preet Singh, who's the founder and CEO of MobiKwik, who's joining us to weigh in on the numbers. Mr. Singh, thank you so much for taking the time out and joining us. Mr. Singh, the UPI has now forms 41% of the GMV for you. How confident are you about sustaining payments margin as UPI continues to scale?
Firstly, thank you for having me here, and I'm very happy to report a profitable quarter because that's what we had committed to the market over the last couple of earning calls as well. We had talked about improving margins as well as scaling up the business, both on the payments and the financial services side. So very happy to report that we have turned both EBITDA and PAT profitable in this particular quarter. Now coming to the payments business, the payments business itself has grown significantly. It's a 12th straight quarter of growth for us, and largely led by UPI, as you correctly mentioned. The share of UPI in the GMV has jumped, over a year from 32% to 41%. But at the same time, our net payment margin this quarter is one of the highest. It's
right, Mr. Singh, we will just come back to you. We are very sorry for this interjection, but there is a very important statement coming from the SEBI chairperson. Let's just cut into it first.
ये इशू ये है कि बॉन्ड इशू करने वाले क्या सक्सेसफुली लोअर रेटेड बॉन्ड्स कर पाते हैं मार्केट. दूसरा इशू, जो बॉन्ड्स खरीदने वाले वो लोअर रेटेड बॉन्ड्स पे इंटरेस्ट लेंगे क्या. तो क्योंकि यदि इसमें आपने देखिए ये रिस्क रिटर्न ट्रेड ऑफ है. जहां पे हायर रिटर्न आपको मिलता है वहां रिस्क भी बढ़ता है. लेकिन मेजर्ड रिस्क लेने के लिए यदि लोग तैयार हैं तो वो रिटर्न अपने बढ़ा सकते हैं, या वो ये चूज करते सकते हैं कि आई कैन गो ओनली फॉर द गवर्नमेंट बॉन्ड G-SEC, जो कि रिस्क फ्री माना जाता है. उसके ऊपर यदि रिटर्न मिलता है G-SEC रिटर्न के ऊपर, तो वो उसकी रिस्क प्रीमियम पे डिपेंड करता है. और रिस्क प्रीमियम में ये है कि उसमें रेटिंग जो है डिफरेंट रेटिंग स्पेक्ट्रम के बॉन्ड्स होते हैं. यदि आपके तरह तरह के इन्वेस्टर्स हैं वो तरह तरह का रिस्क ले सकते हैं अपने मुताबिक, और उसके कंसिस्टेंटली वो रिटर्न अपने बढ़ा सकते हैं. लेकिन ये जानना कि आपके पास क्रेडिट रिस्क है और इंटरेस्ट रेट रिस्क है, ये जानना ज़रूरी है. उसी तरह से जैसे कि इक्विटी में ये जानना ज़रूरी है कि आप इन्वेस्टमेंट कर रहे हैं तो ज़रूरी नहीं है कि मार्केट हमेशा बढ़ेगी, उसमें आपका कैपिटल लॉस भी हो सकता है. तो ये जानना जो ज़रूरी है जिससे कि लोगों में कॉन्शियसनेस आए, और लेकिन उनको एक बहुत अच्छे इंस्ट्रूमेंट की अवेलेबिलिटी भी हो और उसमें भी वो कर पाएं, अपने पोर्टफोलियो को डाइवर्सिफाई कर पाएं. वी नीड, इन्वेस्टर्स नीड टू डाइवर्सिफाई देयर पोर्टफोलियो consistent with their risk profiles and consistent with their own needs. In the life cycle, you may have a need which are different at different points of time. Consistent with the need, your investment should be aligned to that.
On India US trade deal, do you see with uncertainty getting over, FIS will come back to the
देखिए FPIs और FIIs तो उनका अपना डिसीजन होता है कब वो जाते हैं, कहाँ कैसे आते हैं, कितने रिटर्न में जाते हैं. एज ए रेगुलेटर हमारा एक कंसिस्टेंट, प्रेडिक्टेबल, इजी, फ्रिक्शनलेस फ्रेमवर्क देने का हमारा दायित्व है, जिससे कि कैपिटल मूवमेंट्स इजी हों, कंसिस्टेंट हों, प्रेडिक्टेबल हों. तो उस रेगुलेटरी फ्रेमवर्क में हम लगातार सुधार कर रहे हैं. रजिस्ट्रेशन की सीमा जो है, रजिस्ट्रेशन टाइमिंग्स आर गेटिंग रिड्यूस्ड. We are talking to them how they can do digital signature and can submit their documents digitally so that they reduce the time. We have also put out a consultation paper on netting. We have been able to simplify the block deal framework. And we have also issued circular for all the closing auction mechanism, which is very, very important for the funds and ETFs for rebalancing and other reducing tracking errors. So development of the market is, we have also issued the common contract notes. All of these issues are very important for the FPIs in terms of market, regulation.
So how do you...
Rest is their own assessment of their returns, post-tax return, which are available in different markets. Then they keep assessing and they keep deciding about that. But fundamentally, when you have a overhang of a regulatory action which is removed and trade frictions removed, so any capital formation is always accelerated with the removal of, number one, uncertainties. Number two, the investment decisions will be spurred and there will be a greater predictability on the capital to go for that. And it will also have salutary movements on the exchange rate, which also bring in stability and predictability. So in the overall situation, I would say that with the deals that have been done on the trade side, a lot of uncertainties have been removed.
How is SEBI looking at the STT increase in the union budget, and what steps is SEBI taking to help investors deal with it?
I have no comments on that matter. That is a tax matter, and Honorable Finance Minister has already explained it to the public.
सर your thoughts on money bonds? और हम आपने ये भी अभी कहा कि कोई रेगुलेटरी चेंज हम एक्सपेक्ट नहीं कर सकते. तो सर जो चर्चा चल रही थी, कैश मार्केट को डीपन करने के लिए मार्जिन्स कम किए जा सकते हैं और SLBM फ्रेमवर्क को भी स्ट्रेंथन करने के लिए एक वर्किंग ग्रुप था. सर उस पर अगर कुछ अपडेट?
तो दोनों ही प्रपोजल्स हमारी बहुत एक्टिव रडार में हैं. ट्रेडिंग, लिक्विडिटी इम्प्रूव करना हमारे जो मार्केट में, कैश मार्केट में, वो बहुत इम्पोर्टेंट ऑब्जेक्टिव है हमारे लिए, क्योंकि उससे बहुत सारी जो लिक्विडिटी की इश्यूज, लिक्विडिटी टर्नओवर बढ़ने से मार्केट की जो स्ट्रक्चर है वो इम्प्रूव होती है. तो इसलिए हम दोनों चीज़ों, बोथ SLBM फ्रेमवर्क में हो या फिर मार्जिन के इश्यूज में हो, उसमें हमारे कंसर्न कमिटीज़ और हमारे कंसर्न ऑफिसर्स हैं, वो सब स्टेक होल्डर से बातचीत कर रहे हैं और उसका आप रिजल्ट शॉर्टली देखेंगे. और दूसरी बात ये है कि जहां आप STT की बात कर रहे हैं, उसमें भी थोड़ा सा ज़्यादा डिफरेंशियल भी क्रिएट हुआ है बिटवीन द कैश मार्केट एंड द डेरिवेटिव्स मार्केट.
तो सर SLBM में ब्रोकर्स की ये भी मांग है कि सेबी अगर वर्किंग ग्रुप बना रहा है तो जो मेन एजेंडा है, जिसमें अगर एक लेंडर है तो उसका भी उसके भी सारी डिटेल्स एक तरह से सेटल करने के लिए GST जो लगता है, सर उसके ऊपर कोई प्रपोजल है कि वो एक लेंडर के लिए ना जरूरी हो? अगर एक रिटेल आ रहा है, जैसे मैं ही अगर ले रही हूँ SLBM का पार्टिसिपेशन, इफ आई डोंट हैव अ GST नंबर, देन हाउ विल आई बी पार्टिसिपेटिंग इन दैट?
देखिए, आपको थोड़ा इंतज़ार करना होगा. वो लोग सब तरह के इश्यूज की बात कर रहे हैं, तो क्या उसको कौन से बैरियर्स होल्ड कर रहे हैं, वो सब बैरियर्स को आइडेंटिफाई करके हम उचित कार्रवाई उस पर करें.
Sir, money bonds, despite several efforts, it has not yet picked up. What could trigger this?
You're talking of bonds?
Municipal bonds.
हाँ, म्यूनिसिपल बॉन्ड्स में देखिए सबसे पहले तो उसमें एक अवेयरनेस का इशू रहा.
All right, so SEBI chairperson talking on a lot of things, starting from total return swap for corporate bonds, simplifying the regulatory framework, and especially the block deal framework. So, and also diversification and the importance of corporate debt market in India that's still narrow. So he's been giving his take and talking about how regulatory concerns and regulatory framework has been simplified. But then let's cut across Mr. Singh once again from MobiKwik. And Mr. Singh, apology for the introduction, but that was a very important statement coming from the SEBI chairperson. But yes, as did we ask you about the results, a very strong quarter reported, and you were talking about the growth drivers which were registered and responsible behind these kind of numbers. So could you help us walk through it again?
Sure, thank you. Like I said, we have two main businesses. One is the payments business and second is the financial services, primarily digital lending. And on the payments business, as you correctly pointed out, our UPI business has been growing. Our rank in the NPCI rankings has been improving year on year. In fact, we are one of the top 5 fastest growing apps in the UPI ecosystem. And that's largely because of the innovation that we have done in terms of introducing products like Pocket UPI. And this is resulting in growth in UPI from 32% share to 41% share to an all-time high of 481 billion in payment volume processed this quarter. It's 12th straight quarter of growth in terms of our payment volume. So I think it bodes us well in terms of getting enough users, transactions on the platform who are sticky. And at the same time, we are preserving the margins. In fact, this quarter, we have 17 basis points of net payment margin, which is an all-time high and really considerably high compared to a lot of the peers in the payment space. So we are very happy with the growth that we continue to deliver on the payment side. In the last 2-3 quarters, since Q3 of FY25, we had challenges in terms of unsecured lending. So the financial services part of our business margins had been reduced, resulting in overall company going into loss for the last few quarters. I'm happy to report that we are seeing consistent and steady growth in the loans disbursed, consumer loans disbursed on the MobiKwik app, reaching an all-time high of 9,000 million, which is 900 crores for this quarter. But it's not just about headline growth in terms of loans disbursed, it's also actually the margins. For the same quarter last financial year, our growth in contribution profit or gross profit for lending has grown by 4 times. And that is because we have invested in the proper credit policy in terms of selecting the right customers. We are not focused in lending on growth at all costs. We are focused only on working with the very high quality lending partners, selecting the best customers, and also investing in data science as well as having our own collection infrastructure. And that is now yielding results and will continue to yield results. It's a big swing overall when you see in a consolidated level. Our net income has grown, as well as our profit. EBITDA has swung from almost 59 crores. Our PAT has swung by almost 55 crores compared to the same quarter last year. So all in all, pretty happy to be here. But we do believe that the work is just getting started. And the year ahead will see, more things to follow from us.
Right. Mr. Singh, finally, you reported your first quarter of profits. How sustainable is the growth, the profit growth trajectory going ahead? And in the past, you spoke about 15 to 25 odd crores of quarterly profitability improvement. Should we expect a similar trend going forward as well?
So you can't do endless 15 to 20 crores improvement every quarter because that will result into, the entire revenue becoming profit. But I think we are getting into a very stable zone in terms of our margins. There is still juice somewhere. We don't make much money from UPI incentives and all those things. That's a very negligible part of our business. So we have opportunity to make money there. We don't make, and we are investing money in our merchant side business, both on the online business as well as ZacPay, as well as in the offline business in terms of QR codes and devices. Both these businesses currently, we are investing at least 15 crores a quarter. And currently the profitability that we have achieved is despite these investments. So we are hoping that these investments will yield results over the next few quarters, which will then further improve the margins. At the same time, currently our lending business is still small compared to what it can be, given the customer base that we have and the traction that we have on the payment side. So we do believe that the scale up of lending will actually improve margins at the overall company level, and hopefully resulting in better profitability and better margin from what we have delivered over a period of time, not necessarily in the next quarter.
All right, Mr. Singh, thank you so much for joining us today, taking time out and speaking to us on the results. Thank you so much. And MobiKwik in today's trade is almost 0.5% up at 237.57. But on that note, it's time for a short break, and post that a more stock-specific conversation coming up. Stay tuned.
Welcome back. You tune into Buy Now Sell Now. And before we pull the curtains on the show, let's quickly take stock of how the market is shaping up at this juncture. Very, very flat moves coming in as far as Nifty is concerned. We are very range bound. In fact, we're pretty much within the previous session's trading range. Just a downtick of 5 odd points coming in on the Nifty. Nifty Bank, though, is managing to hold on to a shade of green. In fact, Nifty Bank is up a 0.25 point, and we have the small caps that are clear outperformers in the trade, trading with gains of 0.5% right now. So that's how the market breadth also looks like right now. With that, it's a wrap on this edition of Buy Now Sell Now. We'll take a leave. Thank you so much for tuning in.